I want to talk to you about diversifying your investments. So this is where you're spreading your investments across multiple regions and multiple companies, and possibly why you might want to do this. I want to first of all show you how I talk to my clients about how we invest here at MFP Wealth Management. So one of the things I'm looking for is I understand that equities have outperformed historic assets, other assets over the long term. They've served people well. They should serve people up in the run up to retirement and of course beyond. This is not advice, of course. You get specific advice around these types of investments. But I want to show you something that my clients find quite interesting. And when they look at their own portfolios, because that's what seems to happen, people arrive to get advice about maybe the 5 or 10 different pension plans and savings programs that they've acquired over the course of their life. And this works whether you're starting out in your career and you're just starting saving, or you're actually just about to enter retirement or just a few years before. I want you to start looking at where you're investing, and that's what often people are asking me to do, and to get some understanding of how diversified your portfolio is. So I want to show you something called a cartogram that I show to my clients. Now this is a diagram of the world which is produced by a company that I use, Dimensional Fund Advisors, and they kindly produce this once a year as of the 31st of December to give a snapshot of what the world stock markets look like. Now I appreciate, depending on how big your screen is, how easy it is to see this cartogram, so I'm just going to kind of drill in here and hopefully show you what this actually looks like. So just looking down, I've just got it on my iPad, but what are we actually showing? So we've got world equity market capitalization, 31st of December, as I mentioned. And a few notes just to go through. So how do we measure the world? Thinking only in terms of landmass can distort investment decisions. Directly comparing the markets of nations produces some surprising results. Measures such as population, gross domestic product, or exports do not directly indicate the size or suitability of investments in a market. This cartogram illustrates the balance of equity investment opportunities around the world. The size of each country has been adjusted to reflect its total relative capitalization. Of course, as I mentioned before, the world is in motion. There is no fixed relationship between markets, and the proportions can change over time. But viewing the world this way brings the scope of diversification into new light and helps clarify allocation decisions. So remember, you may have some money being invested regularly through your auto-enrollment pension scheme or some previous pension schemes, and even if you haven't made a decision of where they're investing, you have made a decision by not making a decision. So what I want you to really do, I really encourage you to do, is take a look at where you're saving, where you're investing, and work out whether that really is the right place for you to do it so, and whether you're getting the benefit of diversification. So let's just have a look at the world. And we've got a couple of different colors in this chart, and we've got the UK, which is represented by 724 companies, £2 trillion, 4% of the world stock markets. The developed world, excluding the UK, another 10,785 companies, 54 trillion, 84% of the world stock market capitalization. And then we have emerging markets, a further 9,250 companies, £8 trillion, and that's 12% of the world market capitalization. One of the biggest surprises is how big the US stock market is. It is 60% of the world market. I mean, that is just huge. And of course, just for interest's sake, Apple, so United States being made up of 4,000 companies that you could invest if you're invested in the American markets. 38, nearly 39 billion pounds was the value as of 31st December. But Apple itself, 2,154 billion. So Apple itself is 2,154 billion. Look at the size of Apple comparable to the whole market. I mean, it's amazingly significant. So let's just understand or a little bit unpack Is 60% of all companies in the world listing on the American market American companies? No. So you, for argument's sake, you've had companies like Alibaba who've listed in the US, and why? Because they're the availability of capital. They want the credibility and of listing on the US markets, and they like the rules and legislature, the regulation around the American market. It's a great place to list, to be under the scrutiny of the American regulators and to show that you can list in an American market. So let's just dial back out so you can actually have a look at what the world looks like. And I often think to myself, you know, if a Martian was flying past this planet called Earth and realized that, you look down and say, well, you know, I can invest for my retirement, and I can go travel the universe and come back in 10, 20, 30 years and see how that thing called capitalism has done in the world, it would probably look down and go, well, I don't need to put all my money in the UK or all my money in China or all my money in the US, but I should put significant amounts, and maybe I would allocate. You could kind of see why you'd allocate your money maybe 50, 60% in the US, 4% in the UK, etc., to get the diversification of all those companies who are producing profits and will give a return. Well, I appreciate some companies will drop out, some companies will come in, but if you were to leave your money invested in the world stock markets, you'd invest something like this. So I hope that's been useful. A lot of my clients are quite interested in that. They often find that they've got significant home bias. So there's 30, 40, 50, 60% is in the UK. And I ask the question, why? And they've often gone because that was what was familiar to them or the opportunity that they saw at the time. And of course, remember, if you're not making a decision of where you're investing, then you are making a decision of where you're investing. So take that on board. Please press the like button if you've enjoyed this video and it was useful to you. And of course, subscribe to never miss a video going forward. Thanks for watching.